let's have a review of a month on an account, a whole month. I'll pull up the stats and you can have a look at it, but I'll also show you a couple of things that I take a note of. Now, not only do I take a note of them, they can highlight areas in your trading that can be an issue. Now, one of the reasons why I'm doing that, I'll just flick this over, is because of this. I try and help the guys best I can inside of this Discord, and you're very welcome to come along and have a chat with us. Just go into the WhatsApp, sign on to sort of follow it, and you'll get links into here so you can see what we're talking about. Now, I do market updates all the time of what I'm up to, where I'm going, little videos. The guys will ask me to do things, you know, and I'll always follow it through, like Albert, which is what I was doing today. Because in his account builders, will you look through cable or the euro? Well, cable was better today, and I've done that for him. So if we come down into here, you'll see tracked it through, and I've wrote down everything that I was doing. Okay, so did the market call where I brought it up, told them what I'm doing. They keep a track of it, do an update, blah de blah de blah. Okay, so that's all done before I go to market. Okay, so they can see it. But what about aftermarket? Where's your reviewing point? Well, that's what this is all about. It's all right being a day hero, but can you sustain it over a longer period of time? So I'll quickly show you this, and then I'll pull up a sheet that helps me immensely. So as you can see, there's the equity curve. Looks outstanding. You're supposed to do 3 profitable days, which it is there, of 0.5% of the balance. So it's the initial balance of midnight. And I've done the 3 profitable days. But I didn't do them at the start. I built into them naturally. And over the course, because I've finished for the month now, this is now made 793's worth of profit, net profit, okay? Because obviously it's higher with your commissions. I'm quite happy with that balance at the end of this month. Now, as we come down further through, you can see I'm averaging 27 quid a day on it, give or take. Weekly profit, just little under 100 quid this week. So, all right, go with that, all right? Then you go through your transactions. How many transactions have I had? I've taken 209, okay? So 209 trades. Now you can go through, they're not all winners. There is losses in there, as you can see, and I'm going to touch on that in a second. Little clusters. Come back to that one where it was 24. But predominantly, it's pretty darn good, right across the board, okay? These trade quality things, personally, I think they're a waste of time. It doesn't bear relevance to trading. I use broken positions, so it'll never show a true figure, so I just ignore that completely. But I pay attention to what's going on down here. So my average win rate is 80%. So I'm winning 8 out of 10 trades, which you've just seen there, which is 2, but there's normally about 10 behind it, okay? My losses very rarely wipe out my wins, okay? Because I work to one-on-one ratios. So if I'm one-on-one ratio, 80% hit rate, I have a positive expectancy. And then all I've got to do is just keep it going. Now, as you can see here, loss 24, win 42. So the ratios are in line. My profit factor is 5.6. And if you go through every time I've done these, that win rate and the profit factor are roughly around the same all the time. But why is that? Because I do the same thing over and over. And because I do the same thing over and over, I do have that positive expectancy. So let's just pull up the statement first, and then I'm going to come into this and explain something. So at the moment, this is the account that I'm running at. I only trade cable on this. It's the only thing I do, all right? And for those who don't know, cable is pound USD, okay? So at the moment, just so you can kind of see it, there you are, same as. Get the history. Let's put it all on, and we'll just run it back for a while. So we're going back here, right into mid-April. And then you just gently, look at the position sizes. They're very, very small. Because I always start small and build it up, okay? And this is where it runs, and you can see it's running through, running through. The losses aren't that bad, but there is an error here. And I'm going to find it, okay? They're still not that bad. They're not that bad. And then we come down, starts getting up. Position sizes creeping up a little bit. So it starts putting a bit of pressure in. But you run all the way down, just like so. All the way down. But look at all of this. You've got a sea of blue. And then thump. A loss. Bollocks. Then we back again to blue. And again here. Thumper. Had to hold it overnight. But why? Same thing happened, relative. And then you got your total profit, 945, giving you a net of 793. I'm okay with that, okay? Right, now let's look at this. So we started mid-April. So 14th of the 4th was the first day that I decided to go to market. Now this has been running for 45 days, okay? So a month and a half. That's what that figure is up there. It's 45 days, okay? I am looking to achieve the target in about 60 days. That is there, 60, all right? So set its target out. So 60 days, 2 months. Get through your evaluations, keep you going. Well, I've still got 15 days to go, but I'm right at the top, right at the top. Now, Friday, I always step back the pip count. Why? Because I only work half a day. So I'm only looking for 16 quid tomorrow. And then next week, I'll move that back up to 15, 20 pips. And I'll be targeting 25, 30 quid per day. Something like that. So why am I doing that? Because now, when I'm looking at positive expectation, I'm not actually stretching it either. It's achievable. So if you're going down a smart concept, whatever you're doing's got to be achievable. So now, not only am I chugging, I'm well ahead of schedule, I'm not stressed, my position size is correct to what I've put in, everything's mapped out in front of me. So I can work along every single day and go, right, okay, I'm at £1.60 a point, I'm doing 10 pips, and that's going to be 16 quid, rounded to the nearest quid, 17. Outstanding. Right? Now that's easy. Now to get that 17, I could take, I don't know, say 14 trades at 160 will give me 17 quid. I could split it in half. Do 5 trades. 1 trade. Who knows? But when I've hit that target, I'll quit. But sometimes I don't. And that's what I want to show you. Sometimes my ego takes over a little bit. And you start doing a few more positions. So my trade ideas normally stay the same. I have 1 or 2 trade ideas a day. But here I took 4. Fucking naughty, naughty bastard. Took 4 trade ideas. And what happened? Well, look. Bang, bang. I tried to push the boat out. Got into a trade here late in the afternoon. And I didn't hit the day win. It had to run over. So I made a mistake. I made a very crucial mistake. And that mistake could have been bad. So, what do? You keep a note of them and you make a log that you made a mistake, and then you ask yourself why. Well, that goes back to some of the guys in the group. That's because they goad me to do things. They'll go, oh, will you look at this? And I always feel I should, and I should then back it up, and then sometimes I've got to dig my way out of it. Now, in that case, the trade premise still held true, so I was quite happy to run it overnight. But I should never have taken that extra trade at all. My principle is always score, score, stop. Now, what that means is if I'm in a trade idea, I'll go into it twice and then I won't take the third one. Or I'll have 2 trade ideas on the day, I won't take the third one. Because every time I take a third one, I seem to dig myself into a hole. And then just because of experience and one thing and another, I've got to kind of work my way out of it. So the moral of this story in showing you that, because I want to show you it in fact, you know, because this is how I get paid and one thing and another, that doesn't matter how good you are and how disciplined you are, you can still make a mistake. Now the difference is, how do you deal with that mistake? Well, when you saw the sea of blue, I already had money in the tank. That if I was going to be wrong, I could sacrifice a wrong trade, which is why I took the trade in the first place, because I did have money in the bank and I thought, do you know what? I know they're chewing on and they want something. I'll give it a go. I'll do it for them. And it was the wrong thing to do because it kind of cost me dearly. I got out of it kind of, well, sort of scratch. But if I hadn't have gone into it, well, I'd have been up considerably more. So when I talk about less is more and stop chasing the markets, that's the result of chasing the markets. It'll cost you. You're better off once or twice a day. In fact, we had a very good conversation today. And I'm going to give a salute to Yoto because he mentioned something that was brilliant. A few years ago, he was doing kind of a version of a 30-day challenge. It was a 10-pip challenge where the trade Tuesday, Wednesday, Thursday for 10 pips per day. One shot. And he was saying he was very successful. Did very well. But then had the brainchild, as we all have, because I've done it, of, well, if I take 2 trades, I'll get more pips. And his win rates went down. Why? Because when you've been paid, what on earth possesses you to go back to market? That's normally the emotion of greed. And greed is that emotion that will bite you. So I'll cherish your thoughts. I mean, you tell me, do you hit the markets all the time? I come across this over and over. And if you're going to do an analysis, do it from the top to the bottom. Because as you're working your way down, not up, down, it starts telling a story of what's going on. So you can see one set of criteria in the high time frames. And you might think to yourself it's weak. But as you go down, you see that criteria changing. And it explains why it's weak. So in other words, if you've got sort of a daily that is clearly buying, but you see your oscillators are at the top, Bollinger Bands are closing in, and everything else underneath it is selling, well, that's explaining why it's closing in. And then if the oscillator is at the very top, of course it's going to come down. So it explains why it's not pushing any high. All these different little elements. It's difficult to visualize. But I go through this all the time with the guys in the live calls. I do the same thing over and over. In some ways, you could say it's boring. Because it literally is. And sometimes I get a bit frustrated. Because how do I tell them the same thing in a different way? Ultimately, I do the same thing. It's not difficult. Top-down approach, common sense targets, and the urge not to trade. So if you're taking more than 3 trades in a day, looking at hourly signals, you've probably got a tendency to get kicked in the bollocks. Well, I don't mind a slap in the face, but I certainly don't want a kick in the bollocks. less is more. Okay, kids. So I've had a good month. I've ended well. I should be able to boost my Vanguard pretty darn well next month because I've got decent surplus. That's it. So if you've got time, take a look around my website. You see all my contact details. I schedule you there or I direct you there because it's the only place that you can contact me. There's a lot of copycats out there, so be very careful, guys. I never DM anybody and I never offer services to anybody. And that's it. And while you're there, you'll pick up the link for the WhatsApp. And that's it. So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you on the next one.